Hello, everyone, and welcome to Wednesday. It's Wednesday, the 27th of August. The month end is looming. I say it's Wednesday, 2 more days to the end of the month. Not a lot of data today. Obviously, we've had that announcement from Trump yesterday saying he was sacking Lisa Cook, a member of the Fed, who was likely to look to hold rates in September. So the political influence over the Federal Reserve Open Market Committee continues to swirl. The fuss about it and the concern in many parts has held markets' attention for a while. Today also saw 50% tariffs coming into effect in India. Remember the India, big buyer of Russian oil, also Mr. Modi, Prime Minister, coming under the wrath of President Trump. The market here is gold. We can see here. We're going to have a look at some intraday trading in a minute for the major markets. And as usual, guys, there's a particular market you want to have a look at. Let's do it. I'll do the majors. I'll look at obviously the indexes, the US indexes, because that's the cash market that's opening in half an hour. That's the key pre-market level here. But as you can see here, so far today, if we just go up a tad. We had a major move finally in gold. I'm sure you're all aware. A couple of days ago, this big rally here on the 22nd stalled a bit. Or that was Friday. Stalled a bit on Monday, and then another strong day yesterday, heading what looked like heading inevitably back to 3,400. So the 3,350 area that we were finding key resistance last week and the week before, following that shakeout on the 11th, has been breached, but we are yet to get back to the 3,400 level. So we're in a down day today. So overall, the intraday candles are down. So the hourly candle is down. The 4-hour candle is sort of rolling over. So you can see here on the hourly candle, though, we're getting support at the 50-day moving average. So that's a key. Sorry, 50-hour moving average. So that's a key area to have a look for intraday. Obviously, some of you will be trading with pivot points. They'll coming into play as well here. But just on this particular setup, the moving average setup, and the 20-hour moving average, sorry, as you can see here, is flat. We've had this move down this morning into the 50-hour, bounced up, breached the 20-hour in early European trades, and then the following hour came back and gave up all of that early European action to the upside. Remember, London was closed on Monday, back yesterday, and in full flow again today. Relative full flow, given it's still the last week of August. So gold market, the bullion market in London, open and running today again after Monday's closure. So a bounce off the 50-hour over the 20-hour at the moment. So at the moment, the hourly trend is up. The last 3 hours were to the upside. So bear that in mind. We come down the time frames. 15-minute is also positive. So that would have gone long here at 13.15. So 15-minute traders would have taken a long position there. Drifted for 15 minutes. Quite an interesting bearing. So that resistance there, we're breaking through that at the moment to start this new 15-minute candle. Still 5 minutes to go. So obviously the upside target would be that high we got this morning, around about 385 on gold. So that's your immediate target here for 15-minute traders. 384.66 is where the candles themselves couldn't close, right on the 50-minute, but that was a rejection of the 50 period moving average, and then we went lower into the plotting the day low. But this is the interesting one. The early market low here at 6 o'clock, and then again at 8 o'clock, and then again at 12:30. We got a triple bottom here on this 15-minute time frame. So buyers would have shown interest. That was a strong candle here at 12:45, but the trigger for this particular strategy would have been the 13.50 candle, and gold traders here on 15 minutes would have been long here. So remember, the hourly last 3 hours has been long, so 15-minute would have gone long then. Let's take it back down to our 5-minute daytime trading, which we do here when we trade live with you. And again, the 13.20 candle this time here on the 5-minute candle would have been the trigger. Sorry, no, it wouldn't know what I'm talking about. It would have been here, 13.10, as it's gone back over the 20 period moving average. Remember, we would have been short all the way here, probably into this targeted area, which we would have identified earlier in the morning, and quite happy to get out if we'd got this low. Obviously, it struggled a wee bit higher than the low we'd got to early in the day. So the candle low here at 5.55 is lower than the candle low here at 8.15, and it's also lower, but that one's low. So you can see the low just getting a little bit higher during the day. So it might have been a sea of a future rally, lower than the low that we got to here at 3.374 just now over lunchtime. So that would have triggered long 13.10 conservative because it's a very breach. And then certainly added there as we've gone through the 50 at 13.20 and 13.15. So certainly the 5-minute trader, the conservative 5-minute trader would have been long here at 13.15, just below our target level from earlier on Friday night when we had on the daily time. So that's also an interesting situation, isn't it? So that's our low for the day. That's our high for the day. Can we get to it? Well, obviously, as we just saw in the 15-minute time frame, our first target at the moment to see if this rally is going to continue would be a breach of the 3.385. So 3.385 becomes a key level of both target and resistance zone here. So we change that to I'll leave that, make that a green. That's a sort of green target level here from this. Certainly the final entry would have been here. Whether we'd have bought here or not, I'm not too sure, but certainly we'd have been long from certainly here. Let's be a bit conservative, 13.15 here. If we were trading this with our live position. So we'd have been long there as we got back to our target here on the 5-minute chart, and we're still long. My stop loss at the moment, given this, we've just had this big leg up here as the 2 o'clock candle is completed, would still be around here. It's still looking a bit conservative. I might, try to lock a bit more profit in and have my stop loss there. Can you see that? Hopefully you can see that. Around about our midpoint moving average system. So our stop loss, if we're being a bit aggressive there, but more conservatively there at 3.380, looking for 3.385 on the gold chart. But so that's the way, one way of trading the day. Find out where your range is. Obviously, next, if we get through this European high here at 3.385 on the gold market, as the US cash markets opens up in half an hour or so, where's the next level? Well, it'll be through here, 3.387, another $2 to the upside, and then through this cluster here, 3.391 or 3.390. So another $5 from our initial target. So our next target here would be through this level if this rally continues. I'll just shy of the 3.390, call it 3.389 or something through here. We'll just pull that down a wee bit. It's all around about here, 3.390 itself. Actually, it's a bit stiffer than that. Let's just go with what the price action is telling us. So 3.391.47 would be the next upside target if we get through this 3.385 area. It's a big round number, may not happen, but we're happy. We're in the money, and let's just put our stop loss on as well, just for completeness. Our stop loss would be here on this 5-minute time frame on gold, would be here on this particular strategy at the moment. Just make that a red for stop. Is that red or is that pink? Not really see that, can you? So that would have been our stop loss right where we may have entered again there at 3.380. 80.59, I think at 80.50. Okay, so that's gold long currently on the 5-minute time frame. Let's have a look at elsewhere. The indices ahead of the open, that was gold long on the short on the 5-minute time frame. Again, remember what we've done. We're in agreement with the 30-minute time frame or the hourly time frame. That's long there at 1 o'clock. Stop loss down there initially, and again stop loss here would be still probably just around about this level on this 30-minute time frame. But positive break at the moment, 230 ahead of the US Open. But again, you see it might be that resistance we got to earlier in the day, so watch that might get rejected. So that's why we're going to be looking to get out round about this 385 area on a shorter time frame. But our hourly has been long now for 3 hours, or it looks like it's long for 3 hours. But again, could easily hit that, and then we come back down. But we are supported, as we said earlier, our stop loss at the 20-hour moving average. That's where our stop loss is on our 5-minute time frame at 3,380. So just suck it and see what happens. If we were trading this on this hourly time frame, we would have been short from 4 o'clock this morning. It's like a trigger short at 5 o'clock. Initial target would have been probably the 50-hour moving average, and then this low here. See these hourly lows here, which we haven't got to, and that happens to be again on our higher 4-hour and daily time frame target. Where our entry was the other day on Friday's close, and our stop loss is now on the daily time frame. So that didn't happen this morning. We've provided resistance at at what we've now plotted as our low for the days, and we saw when we drilled down into the detail of the day, it's been tested 3 times, so that's quite a strong, relatively strong support on those shorter 5-minute, 15-minute time frames. But that's the range so far today as well. So so far in this European session, I should say, obviously in the open in Asia, which we've come down from, we've sold off from our highs up there at 3,393. So the first look at 3,400 this week has taken a downturn. But as again, you can see here on the hourly time frame, the highs are getting higher, the lows are getting higher. So the trend is still set. We're still, there's a channel there from these big candles. And there's our support at the 50-hour moving average. So again, depending on the time frame you're trading, go with the flow. So we're long on 5 minutes. Gold is up, and having been short this morning and then short again earlier. Currently, we're up to the upside. As I say, the majors are the indices: the US 30, the Nas 100, and the S&P 500, or the SPX 500, as we call it here. So the Dow. Our high this morning, sorry, that's what's this? This is hourly time frame. Let's just set that. This is our pre-market high. Let's come right out. Our pre-market high today was 12 o'clock this morning. Hang on, what I've got hourly. Sorry, that's today. Our pre-market high is quite a tight range because we are waiting for one of the big boys to report. Nvidia report after hours tonight. So you can imagine stock market is a bit subdued. Yesterday we were up 26 points. Monday we were down 27 points. So we're literally sort of sliding sideways on the S&P. The Dow was obviously a bit moved. We lost 350 points on Monday, and we gained 135 points yesterday. But as you can see here, it's quite a narrow range on the hourly time frame. So if we come down, so that's really not telling me anything. That's just non-tradable, I would argue. It's biased to the upside simply because the 20-hour moved above the 50-hour this morning. But since then, there 6 o'clock this morning, we can see we've drifted lower. I wonder why it's formatting like so strangely. There we are. It's a bit. Hopefully that's a bit better. You can see we've been drifting lower, but into the 20 days. So that's our support. In between that, interestingly, we're now testing our pre-market low. Remember, we're literally 11 minutes from the cash open. So it looks like that pre-market low that we got here on the European Open here at 8 o'clock. May get tested again. So the downside target ultimately might be that 50-hour, or the ultimate support today could be that 50-hour moving average. Remember, nobody knows. We don't know. These are just what this particular strategy is showing us. So 45,353 to watch on the hourly time frame. So if we come down to our 5-minute time frame, remember we've drifted lower, but with little direction. So very difficult to trade. Even into open potentially, but there's the sort of sideways action. There's the gap, or the last leg lower was there at 13.25. See, it's very choppy, so we're careful on this one. There's our pre-market low, which I marked on earlier this morning. Interestingly, since I've been talking to you, we've approached that level as well. So a bit like gold, not exactly like gold, but we've had this sort of um, a double bottom at least, possible treble bottom. So bit of a triple bottom there here on the Dow. So we bought it. So we may be looking for this to move up, but at the moment we remain short from that blue cross there. That would have been quite a short. We've got a gap in the market there from 1325 to 1330s. That's never very great, very positive, and so lower, but very, very choppy. So be careful where your stop losses. My stop loss at the moment would be around about this 20 period moving average on the Dow, but we could quite easily turn this around as well, or we could bust this pre-market low and move much, much lower. Equally, so far today in the European market and the early Asian trades, that the high was plotted at 9 o'clock my time, so after the European market had opened and after we'd put in the low. So it's really, that's the key range today, and there's not a great deal happening to move that. Obviously, all expectations will be reaction to what NVIDIA posts tonight. Remember, NVIDIA, I think I posted the other day, a huge, I think it accounts for 7% of the, let me just double check. I remember taking a screenshot from something that Reuters had written about over the weekend. And Nvidia alone has a nearly 8% weight on the S&P 500. So Nvidia itself is $4 trillion company. Has accounts for 8% of the all singing and all dancing S&P 500, the world's most important factor. The tech sector itself, the 11 sectors in the S&P 500, 33% of that is in technology. So of the 11 sectors, technology is massive outweigh. And this one company now, used to be Apple, previously it was Microsoft, Amazon's been up there. We are very, very tech heavy. So again, we have tested this pre-market low again, but it's been bought again. So this is a key technical algos kicking in here 5 minutes before the session opens. But I say this would still be low. Our stop loss would be there. So there's a little bit of gain on the S&P, on the Dow from that time frame there. We're trading here on this 5 minute time frame, so that remains short with our stop loss there. Let's put that in. Well, actually, we don't need to mark that, do we? Because we've got the 20. I'm saying it's there so far into the open, but we've got careful. Even if we get hit, it'll be a profitable trade because our entries here, our stop loss is a little bit there. So there's a couple of, even 50, 100 points on that. Given the spread is quite meaty, obviously, on the Dow. Elsewhere, the NASDAQ, a similar sort of pattern one would expect. There we are. So Dow short, the S&P short here from 1325. Bit more momentum to the downside. We've already broken the pre-market low here ahead. So the pre-market low is not where I had it earlier. It's now here, literally 5 minutes before the market. So we're opening at lows for the day. Where does that compare to yesterday? Well, yesterday we rallied quite significantly, as we said. We were up yesterday, having been down on Monday. So how far down do we need to go to find the buys? Well, let's go up a time frame or two and see where we are on an hourly basis. On an hourly basis, we're under the 20-hour moving average. That's a significant move here into close. And we could move as low as 23,467 here on the Nasdaq. So if I just mark that in horizontal array again, I just mark that in as a red line. That's not stop loss, but that's the next downside target, certainly for hourly traders. I haven't breached this 20-hour moving average and rejected the pre-market highs. So pre-market lows coming in at the open, which is always interest. So the pressure to the downside is continuing, but again, I say, real orders could change all that very, very quickly. S&P 500, similar pattern to the NASDAQ, breaching the 20-hour moving average. I haven't marked on the highs and lows here, but you get the point. That's our high. This is our low pre-market. But let's just go back to the Dow, which we were which we were looking, actually got the one I prefer to trade on an intraday basis, just simply because of the numbers that's involved. So here comes the opening in the next 5-minute candle. So again, we've so the pre-market low is below where we were. So these triple bottom, if you like, may be getting bought, but again, we are still low. And I might have squeezed a bit more. Given this is only the 5-minute time frame, I might have squeezed. I got to actually no, I'm leave that there because there's only 2 candles behind. I'll leave my stop loss up there at 54,419, basically the 20 period moving average from the short here going into close, having broken out of this range there. So we were, trending, and then we went sideways. Here between 10 and 2 over lunchtime, not unusual, and then down here for the afternoon session to start the US session an hour ahead of the open. And there we are, pushing the pre-market close, pre-market low even lower as we move forward. So let's see where that one to the downside. Of course, boss, I'm actually live. Of course. All right, finished. She's forgotten them. 5. Okay, boss. Yeah, so there we go. Lower again, so in the money. Where we I might again. So I'm happy to pull as we're moving lower. Let's put that. Actually, the stop loss was there, wasn't it? So let's drag that a bit closer. Actually, leave it there as the opening trades come in danger of getting stopped out. But we got in here at 45,426. We're at 414. So there's 10 odd points on that on the Dow, which is it's not massive, obviously, but it's it's a quiet Wednesday, really. Just markets waiting and seeing what's going to happen with Nvidia later on. So you're welcome, boss. Don't worry. This morning we had a similar move on the DAX this morning. It's much more one I do trade. Again, you see the high, the break here at 6 o'clock. I wasn't looking at that. I was looking at it at 7 o'clock, but it had already moved lower. So I was short around about here. The 20 period has kept us the right side of the move, sideways into close. There's the 8 o'clock. Sorry, there's the 8 o'clock candle. Looked like it was rejecting lower, but we hadn't broken over the 20 period here on the 5-minute, and then we just moved lower and then lower. Some really quite negative news swirling around in Europe today and yesterday. Also, we had that debacle in France, disruption, looking like a no confidence vote coming next month for the Prime Minister, and then the surprise announcement this morning that the Netherlands could also be the Prime Minister there could be ousted as well. A bit of so it's not happy with the European markets this morning, that uncertainty. But so the DAX was short this morning into in the open. I was happy with that. Took some pips out of that one as well. There's the low of the day. Trading session. The pre-market was lower, so there we go. It's pre-market low. That's our current low of the day for the DAX down here at just above 24,000 at 24,010, I think it is, something like that. And we're coming back to having recovered from that. Looked like we might have been moving higher here in the face, countering what was going on in America, but against really very sideways action here, and then the DAX in convergence with what was going on elsewhere on global stocks, started to move lower here at an hour before the US Open. So we were again triggered short here at 13.35 and into the low. So again, are we going to test a new low of the day? First target would be 24.029 and then 24.12, which is the low pre-market in the European session this morning. Not a lot of data drive this. Obviously, anything coming out of the White House moves things these days. But the DAX also low. So let's have a look at. Let's go back to the Dow on the open. So there we go. We did pull our stop loss down there, but so far it's held. Looks like it's going to get smacked back through here because the pre-market low did get low there. So and it's been bought. So that's that triple bottom we'd identified before. So really the buyers that could come into play. So our short from here to here has been taken out now. So this could be turning around, but obviously this is literally the first seconds of the new trading day, the new cash. There we go, trading day. So what we take from this at the moment is this triple bottom that we'd identified on the market, a pre-market, as being a player. So we've kept our short in position. We'll let this settle now and see. So what you could have done quite easily, you've had that stop loss there for your short position, following the strategy of the system to go down, and then a potential sort of buy order around about this triple bottom that we'd identified here on the 5-minute time frame, rather speculatively, and see what happens. And you can see that the pre-market range shows how little movement we've had in these August markets. The first 5 minutes. Oh, the first minute, in fact, isn't it? Where are we? We're at 32. So the first 2 minutes of the cash session has already tested created a new low of the day, lower than the pre-market low, and it's also gone to test the pre-market high that we had here just after an hour after the European Open this morning at this 45.47. So it's already had that range. And where's it going to settle? Where's it? Well, according to the 50 period moving average, should settle through this midpoint here. But at the moment, that short was closed out for a little bit of profit from this movement here, and it would have triggered. Let's say, would have had a potential long position to trigger on the return back to this triple bottom and to the upside. So see how that all settles out. So again, the movement lower is being taken out. But obviously, if we go up to the first 15-minute candle of the new trading session, we're back to the sort of this congestion range, which again you would expect given the lack of news and the lack of direction ahead of Nvidia's news later on today. So watch that one as well later on. I say markets just really sort of churning sideways. All the chat on the wires and on the TV stations is really all about Nvidia tonight, and it has been really most of the week. Obviously today, as I said, it was the implementation of the 50% tariffs on India going live, and see where that pins out. Obviously, the other thing, we're coming to the end of the month. That means PCE on Friday, the Fed's preferred measure of inflation. Remember what Powell said last week at Jackson Hole, that the labour market is perhaps taking more of a hit than had been anticipated. So it was more of a hawkish tilt by Powell, which the markets took to say, it looks like we're going to go with a rate cut in July, even if it's just easing the political pressure from the administration. But that's obviously been cranked up with the news about the sacking of Lisa Cook. She's appealing it, saying it's illegal, can't be done. So she's not going anywhere very quickly. And she's obviously still, I would guess, still going to be around at that meeting in September. So we'll see where we go. The other thing that Reuters were reporting this morning was the administration is, again, whether they've just dripped this news out to test the water. Not only the actual Fed committee members, but the actual federal regional banks in the 12 regions of the United States. So that's spreading their wings much further than just the members of the voting committee. So, unprecedented move by an unprecedented president, and nothing is to be a surprise. But it looks like the Dow is opening in positive territory. Let's have a look at the Nasdaq has done a similar thing. Remember, the Nasdaq had already moved. There we are, a weaker move. That's obviously the 50-minute chart, but a weaker move for the Nasdaq into this level, which we talked about testing, the 23,466. I think is that a stop level? So what are we talking about? Why is that on there? We didn't put that on there earlier, did we? That's 23,466. It's there for a reason. So new, or was that the new pre-market low? Perhaps was that the new pre-market? I think it might have been. Yeah, of course it was, because that was. So we'd gone to that. I'm sure that pink line wasn't a stop loss, was it? Let's take that off. It's confusing me now. So the pre-market low. Was it there, or was that the actual open? That's the opening candle. So the pre-market low was there. Perhaps it was that level that's been bought. But that remains, you see there on the 5-minute, the Nasdaq remains weaker. Obviously, the Nasdaq and Nvidia, huge technical tech stock. And again, short from here. Oh, perhaps that was a target area for some reason. Why was that a target area? Oh, it was the, I remember now, right? It was the 20-hour moving average, wasn't it? The no, because that's there at 3.5. Oh, was it the 15-minute 20? I don't know what that's. I can't remember what that. If somebody remembers what that red line was on that Nasdaq 100 chart, whether it had been earlier, but it didn't look like, because it only stopped here, so it must have been something to do with this opening trades. But anyway, Nasdaq remains short. The Dow has bounced to the other direction, interestingly, probably on the I think was it United Health's news this morning. So there we go. So that's classic potential, classic sort of things that happen in the markets. We plotted our pre-market high, we plotted our pre-market low, we made a new low in the opening candle, and now we're going to new highs for the day. Can we break higher? Well, it's ran right to at the moment, and we'll see where we go, where that turns positive. So the 5-minute candle, we were short into open, that got stopped out, and now that would have triggered long here on the first 5-minute candle of the day. Don't be afraid. So we'd have gone long here now at 45,458. Taken some profit off. Just it's not very far, but that was a resistance level, because it was the pre-market high today, and you see it was higher than we got to yesterday as well. So that's looking relatively positive for the Dow. You can see the divergence we got there. The tech company, the Nasdaq 100, still short, and the Dow moving high. See what the S&P 500 does. It normally is in the middle of those two, but again, that was continuing to move short. So again, that would have been short from 1325, and again, I'd have probably might have had my stop loss a bit tighter into open than it was on the Dow. So instead of having it at the 20 period moving average, I would have had it through those candles. But again, that short would have been taken out. The triple bottom, again, you can see in play. We did test lower, so this is that's our opening. Was that pre-market low? Indeed, that is. So the pre-market low there was plotted literally 5 minutes before we opened at 1420. But again, you see the pre-market high at 6473. Is that still there? That was the Asian session. The European session was lower at 745, and the European session was there. That was the pre-market high there, 6475. So if this break continues to the upside, again, could we test the daily high at 6473 here on this derivative chart? But the big move was you can see on this 5-minute time frame, was a move lower from 13.25 into the close. And again, stop loss, I say, probably would have been around about there if I was scrolling this down. And then if I'd still had it open as on the opening trades, it would have been stopped out there. But nice profit short on the S&P 500. And now that triggered long after the bounce here at 6466. But again, not too aggressive, given that we've had quite a vicious move on these short time frames. So the Dow and the S&P 500 in sort of sorry, the Dow is outperforming the other two. So there we go. That's our long now at the this first candle. Or indeed, as I said, we could have looked for a buy at this triple floor here. So I mean, if we had set that up, we could have been long from here, but certainly would have been long from here, 45,455 or 45,399. So big 40-point difference. But we're still in the money very much so, and the Dow moving higher and plotting new day highs. 45,500 is just been spiked to as well. So another big round number in play. So strong start for the Dow. S&P 500 a muted, also a positive start, but less so. The Nasdaq less so. It continues to decline, and the Nasdaq 100 declining even more. So the low of the session so far is 23,459, and that remains short because remember we said we were at our stop loss here, and it hadn't been stopped out on the opening salvo. So that continues to move lower, and we got this clear divergence between the three major US markets. And it looks like something may have been said from somewhere, or somebody's reporting something. Let's bring up my internet feed on Bloomberg. It's not it's the TV that you can get on YouTube. It's a bit delayed, but Jatin, hello, my friend. Gold trader, if I remember rightly, Jatin. Let's have a look at where we were with gold. I can't remember what we did with gold earlier on. So metals, gold. There's our we stopped out. I can't remember. Where are we? There's 13.15. So we're saying that was it looks like that's been stopped out in the open. So we were. So that would have been long at 350. This is what I was saying. I remember. So we were long at 13.15, and it ran up, and I still have my stop loss down there. So we've made a little bit, not a massive amount, but we'd got long at 3,373.75, and we'd have been stopped out. Obviously, these are round numbers, guys, on these demo accounts. 3,380. So. $3, three and a bit dollars, $2. Let's say two and a bit dollars. Took the spread into account. About $2.50 on that. Gave all that move up, but that was all we talking about. This was our target, wasn't this? 385. We didn't quite get to, and it's come back down. That's what we were talking about, weren't we? Stop loss was here, our target was here. That's what it was, and we didn't get to it. So that's interesting as well. So it's reversed as well in on the US Open. So. That long positions have been stopped out, and also it would have triggered a short position. It's the issue. You're going to trade these short time frames, guys. You can't hang on to stuff. You can't get attached to it just because it's a winning trade. Wasn't as much as it should have been. You're now short here from on the open, and so big as the big 230 short into the 50-hour. It rallies in the first 5 minutes, and now we've breached the 50 period moving average as well. So that remains short. And are we going to test the low of the day? But again, you see what we could have a similar situation like we saw with the equity markets, where we get buyers at these triple bottom setup. But interestingly, we're now back to the T1 level where we were entering an hour or so ago at 13.15. and that continues to move lower. So, Jatin, hello, my friend. Anything you wanted to look at other than I don't know what you're trading? I'm assuming it might be gold. I don't know, but so we were long. We had some dollars, and now we're short. But short from let's move this down. That was our target. So let's put this green line. That's our short current. That's currently open on the 5 minute. Stop loss would probably be about. Well, the 20 is there, so I'm happy to have it there here on this 5 minute time frame. And I'm looking. I'd be looking for to get out around about here. This 33.75. I'm not going to hold it too much. Like we didn't quite get to the high of the day, did we? So through here, certainly perhaps get out at 30 at 3374 area, 73 area. Sorry, 75 area, something like that. We're at 3376 at the moment, so it's coming back again. But anyway, see if that one gets stopped out as well. That would be a negative close. So we want to try and run that down. It's moving lower. Some big volatility on it. It's open, so I pull the stop loss down to our entry. See how this candle finishes in the next. It's just finishing now, isn't it? Or it just started? Just finished. Yeah, timing's. Don't hold the timings. Too much to hold. Okay, so we'll come back to that as well. So gold from long to short. That's what we're looking at. Let's have a quick look at what else is going on in the market. Aussie 64.72. So down again. Dollars. I've seen some interest this morning, today, I should say. That rejection we saw this morning of 65 has followed through today. And again, another one making new lows um, today, 64.26. So dollars had a good Asian and European session this morning, and it's given up a bit here as the US traders get in. 138.50 for the dollar CAD. Dollar again rising against the loonie, but can't break that key 138.50 and hold it. Yesterday we got as high as 138.67 before we give it all back up and back into 138.25. Yesterday afternoon, I saw we peaked another 20 pips for the dollar CAD. Swissy 80.50. That's I don't know if you saw my post on the Discord group, but we literally caught the bottom. There we can see it quite clearly there. We literally caught the bottom of this on Friday night, just above bottom. We got in down here at 80.07, looking to go short again, and it went against us all day. I eventually got out here as we went through the 50-hour moving average, just ahead of the stop loss. I should have looked at it earlier in the day, but I didn't. It was an end of day one, so I thought, oh, that's not even gone any way in our direction to start the new week. So I got out just ahead of the stop loss, and it did in fact go through the stop loss. Come back a wee bit, it's still, and that was a losing trade. So dollar remains a little bit up against the Swiss franc. Can't again, those highs again a tad higher. We moved up from our closing low on Friday so far, which is where we were short. However, the caveat is that we can't get back to the big sell-off we saw ahead of Trump's speech. So 80.85 or 80.84, and then the .8100 level is the upside area. If you can start to try and buy this again for the Swiss franc against the US dollar. Got a yen back to 148 and having a better week continuing. Again, higher lows here, higher highs. So the trend from Friday's shakeout is more positive. You can see we're again not back to where we the 148.50 zone where we were on Friday ahead of Powell, but we are at 148, recovered 148 round handle. So that's dollar remaining relatively on the front foot so far this week. Kiwi 58.28 to the downside, a stronger dollar. Euro and sterling here in Europe. Europe, say we've got this string of political weak news from the Netherlands and France in particular. Also, the French implications are much more significant than we are out of Holland, out of the Netherlands. However, we are now under 116 again, as we were briefly on Friday, but the move lower has been quite significant. And if we got to the higher time frame, we were out the bottom of our channel. Remember this channel we had on our daily time frames. But there we are, still relatively sideways. I don't want to say. So relatively sideways, but the channel we create with the low at 1550 80 1575 and the significant 116 level, which had provided support for most of August, is now getting breached as we come into the last few trading days of August. So the resistance is now to the upside, and the weaknesses to the downside now have turned around in this second half of August. So the 20-day and the 50-day now provide resistance to the upside. And I say we're under 116 to the downside for the euro and down day. Next level is at 15. You see here this low we got at the end of July, not long ago, is it? 115, and then all the way down here at 114. So we could see some moves on there as well if this breach of the 116 level becomes significant. At the moment, it's not significant. I'm saying it on a day, but today, so we need to see some bigger full body candles under this 116 level, and more importantly, sorry, that's important, but more also quite significant is the that 115.75 area is also still quite above for the rest of the week. But some significant news coming. Obviously, we got, as I say, got the PCE data for the US and GDP tomorrow, and the University of Michigan inflation signal. So we see two inflation mentions. Remember the turn from inflation back to jobs from Jay Powell last week. And so that then brings in next Friday, which is obviously non-farm payroll, and weekly claims tomorrow as well, and weekly claims next Thursday. So jobs taking more of a focus now than the inflation outlook. But again, there's a surprising news, those inflation readings, either from sentiment reading from the University of Michigan, or the more important PCE data on Friday, all turns on its head again. So always be aware of all these news flows and how we can impact it. But Euro 116, big support area. Is it going to breach? Is it going to be significant to the downside? Is it going to hold? Is it going to be significant to the upside? That's what we've got to look forward to. But as the month end comes round on Friday, and finally sterling. I'm saying finally on the place. Finally, sterling 134.50. So the brief rally on Friday over 135 didn't hold, and we've been down Monday, bounced a wee bit yesterday, and we're down again today. But again, flatlining the 20-day move now, which is this 134.50, a breach of 135 itself to take us higher, but we are now looking perhaps more to 134 than 135 today, the other way around yesterday, so don't get too carried away. It is August, but the trend down retrace looks like 134 looks a bit more likely than 135, but we shall see. So sterling 134.50 currently. Bitcoin, we talked about this on Monday about the 112,000. Well, what happened? Well, we went below that, and we went to the next key level, which is that 109,000, which had provided this all-time high back the top of the rally post the election in November. 20th of January, remember the inauguration day. Remember we put this on that day. If we go back to that day, there it is. Huge, huge, significant. That's May. What I'm talking about. Um, hugely significant rally here um, from the November lows. Oh, dear me, we've massive, aren't we? Just bear with me a second. So I was trying to get my story. There's the November election, the 6th. This massive rally to 109, and that became the resistance into it here in January. It obviously descended into the spring, and we had that rally and resistance to it again. Then we peaked higher and went sideways through that 112 area. That then became support now for the summer, 112, 112, and then on we had in fact, we had quite a good day on Friday. It looked like we were going to go back up, but we hadn't moved away from the 20-day moving average. And we had a weak weekend and then a very weak Monday. So we went in to test under the 112, which we talked about this short position here, and continue to decline yesterday before we found support at 109 for now. But we need to get back over 112 and certainly back over 104, what is now 114,700 to get over the 20-day moving average. And the 50-day moving average continues to flatline at 116,300 or 116,400, you see there. So Bitcoin weak in this second half of August. Where will the support come? Well, the next big support, as we said on Monday, is that 105, 106 channel, and then the 100,000 itself. So the momentum remains to the downside. You see the MACD is still moving lower. The cross of the MACD line, the signal line here on the MACD indicator here happened on the 17th of August. So as we say, second half of August is being weak. Volatility has ticked up a bit. As you can see, quite a rise in the ATR as well here from mid-August. So it's with volume, you could argue. And the RSI continues to look quite weak, but picked up from its low at 36 yesterday. But again, ticking. You can see that on there. Okay, so Bitcoin remains weak. Not weak as the outperformer, which has been Ethereum. We weren't talking about Ethereum until we had this big move, but a huge volatility has come back to the Ethereum market. Some massive uptick on Friday and then sold out very significantly on Monday. Um, but again, you can see that the 20-day moving average has provided that key support for believers. So we might have seen the last of the buying flow. We didn't quite get to 5,000 for Ethereum, but still bid over the 20-day moving average at 4,590. Even though some of the momentum indicators looking relatively weak, see that's still moving down, or size moving down. MACD histogram negative. Again, we see the rise we've seen in the ATR, so the volatility of the days increasing these bigger wick candles. So that's your look, my friends. Remember, we have our 30% offer for 3 days, 26th, 27th. This is midday, and tomorrow, the 28th. Check out um, our social media channels. You can find us on X. It's a little buttons on there, so click on that, register, and there's our X channel. So me now talking now. Yeah, there we are, live session. There we are. Flash sales 30% off for 3 days only. Get your code. 3 days only. It started yesterday. Today's day two. It expires tomorrow, guys. So don't hang around. 30% off across our challenges. We got some very very clear open rules. We got through this trusted prop voting as well. Came out very well on that. Easiest rules. So we've got some very, very simple, clear rules to keep you safe, and do check us out. So really, as I say, relatively quiet week, hence this live trading session for the US Open. We'll come back to where we are. Confidence yesterday, better than expected, bit of surprise, this consumer bought confidence. Durable goods also not as dire as many were expecting. It obviously remained negative. The monthly number for July, the core number was a big surprise to the upside. So this front running of hard goods, durable goods, continues to hold up basically. So consumers are quite a tick up from expectations, but last month was revised a tad higher as well. Um, I say the key data is really Friday's PCE price index out of the United States. What is the inflation looking like as far as the consumption and expenditure? And then later on the days is this the key sentiment indicator. One of the first sentiment indicators, the University of Michigan consumer sentiment, consumer expectation trigger that showed the weakness that the consumer was looking for, having been very, very resilient. So that's flagged to tick lower again on Friday. So watch that. The backward-looking GDP numbers for the US and Canada as well this week. German CPI on Friday. Thursdays, we've obviously got our claims numbers, and that's taken more significance on the back of what Powell had to say on Friday. But if we just go back to the PCE, the CME Fed Watch tool, remember we were in the 90s plus 90 odd 5% chance of a rate cut at one point for this meeting. That's declined. Where's it gone? There we are. Declined to low 80s. It's now back to 88% today. Whether that's on the back of the Cook debacle or not, I don't know. But yeah, so the hawkishness of the Fed is in play. So back to 88% from, say, it was we were 82% last week. It dribbled to, I think we went under 80% as well this week, but last week 82.4% this time last Wednesday got to 88%. So that looks more or less nailed on. And markets are now looking beyond that. What's going to happen in October, the December, November meetings as we move forward? The October and December meetings. But again, you see a big 6-week gap. End of October, and all of November and the first couple of weeks of December for the final announcement for 2025. So perhaps more to come. That's what the market's looking at. Hence the weakness we saw in the dollar. But again, we said the last couple of days, dollar's come back again. So everything in play. I say tonight, really market moving data is the Nvidia story. Let's just go back to have a look at where we were with our positions. We were trading on these short time frames. So if I can remember, where were we? Were we short? Yeah, there was a stop loss here. We were short. We were entry here, and so that's still. That would still be open. Our target level is this through here. We actually, how's that gone? Did we actually put it through there? Oh God, my brain cell. It was actually we were talking about through this level, weren't we? This bit higher than 75, 50. So perhaps we haven't quite got there. We got as low as 75, 60. So we're talking about a target here at 3,375. Like we didn't get to the upside target we had at 385. We haven't quite got down to 375 either, but we're still short from here. And there's our stop loss at the moment. Pull that down to the 20. How that this target, that a lot of volatility there. So that finishes. So that would still be running, and elsewhere it wasn't. It was the indices as we were trading the open. So the Dow again long from that one there, having been short earlier. So stop loss here, or it might even pre-market high now. So that's still open. The Nasdaq short. Our stop loss is around about that 20-day period moving average. So that's still short. It's come back a bit. That's the earlier, the pre-market low, and the S&P 500, which we didn't really talk about trading, but it's a similar pattern to the Nasdaq, isn't it? So anyway, guys, I'll be with you tomorrow. The claims, weekly claims, and ongoing claims. In the meantime, do get to our website, get to our get this. There he is. Get this if you can. 3D offer. It runs out tomorrow, day one. Yesterday, day two today. It expires midnight tomorrow. 30% off across our range of products. It's very easy to open an account or buy a challenge. One step or two step. You have a pro or a standard challenge. Express account is the one step. Pro challenge and standard challenge. One step or two step. It's up to you, but it's a huge 30% um, discount is available once you register here, and you get the code emailed back to you. Okay, so give it a go, my friends. So get on our accounts, click on there, get the code, and we'll give you a 30% discount off what are already very, very well priced challenges. You know, less than $100 gets you £100, a $10,000 account. You got a couple of $100. You know, for $25,000. That's a really nice size trading account. $25,000. That's hence why it's our most popular, whether you're using the one step or the standard. Like you see, pro again, $25,000. Tighter challenges with the pro account. So anyway, we'll see you again tomorrow. Jetting, yeah, get another account if you can, if you want. It's up to you. And there's no restriction on how many accounts you can have. Obviously, you can only use this coupon once or this code once, but we're here to help, my friends. Hope your trading's going well. You've been sharing your successes on our Discord group. All what we do is on our Discord channel, guys. So download Discord. This is our general chat level. All sorts going on here, but we do pride ourselves on the response you get from the guys. Johnson is one of our support guys, and so somebody asks a question at 8 minutes past two. He answers at 9 minutes past two. That's the sort of team we are. Katson's very, very on the ball. 16. They're answering the same guy though. I'm just looking at what they've put up. And Thompson is also another key moderator on our general chat group. But most of my stuff, I obviously chat on there as well. But the trading strategy is where I put my end of day trades. That's the one I share with you here, not those end of day scouts. Too many going on. But at the moment, it was a relatively quiet week last week. It's been relatively quiet this week. I wasn't around yesterday, but we're sort of. I think we're about. We were up 55. We're about up flat basically for the week. I think we're up 10 points. And these are our open positions at the moment. The S&P 500 and the Dow are both long. They're both out of the money. The pound Oz hit its first target, still in the money, and we opened a 4-hour trade short on the Aussie dollar as well earlier over lunchtime. So that's going. So take care. See you all tomorrow. Be good, be safe, and may the pips be with you as ever. Justin, thank you for being here and your comments. Take care, everyone.